Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot, and we have an exciting income play for you. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there's risk involved. To see more about risk, please see the description below. Today's income pick is Universal Health Realty Income Trust, traded on New York Stock Exchange under symbol UHT. It is an overlooked REIT that has been an institution for high-yield hogs looking for reliable and growing dividends. In fact, it has paid dividends for over 150 consecutive quarters and has raised its dividend for the last 38 years. John?
Yeah, thanks, Mo. Investors have definitely been able to rely on Universal Health for its growing high-yield dividend, but there's also room for additional growth. Before the pandemic, Universal Health Realty, the shares were actually they're called units, were trading at record levels, and as expected, they took a hit during the opening weeks of the pandemic. And while UHT, as a company, continues to do well, its units haven't recovered yet from the pandemic, or not totally recovered. Universal Health units are up 7.5% over the last month and 3% since the start of the year, but they still need to climb an additional 120% just to get to where they were before the pandemic. And there's every reason to believe that Universal Health units will recover over the long run.
And I have to ask why.
Well, I think it's dynamics, as you can tell by the name Universal Health. It's a REIT that focuses on healthcare facilities. The trust has 76 investments in 21 states, including acute care hospitals, medical office buildings, rehabilitation hospitals, things like that. And healthcare is a very lucrative business. Every day, 10,000 baby boomers turn 65. That means more tests, more prescriptions, and more doctor visits. And that's created a boom for healthcare companies, service providers, and life science businesses like Universal Health. Yes, eventually all those baby boomers will retire. I think by 2031, all baby boomers will be older than 65. But there's a bigger wave of retirees coming. By 2050, the number of people retiring each day will hit 12,000.
This should translate into bigger spending on healthcare, right?
Absolutely. And there's stats to back that up, of course. According to the National Health Expenditure Accounts, U.S. healthcare spending grew 2.7% in 2021, hitting $4.3 trillion or $12,914 per person. And this accounts for every 18.3 cents of every dollar spent in the country's entire economy. So for companies like Universal Realty Income, this translates into growing rental income, and with more money being spent on healthcare and built-in rent escalators, companies like Universal Health are on the receiving end of reliably growing revenue and earnings stream. So case in point, since 2017, the partnership has seen its revenue jump by more than 25% to 90.6 million. That big increase comes on the heels of growing portfolio and rising rents. Now, keep in mind that even a modest 1% increase in rent will result in millions of dollars in extra income every year. And when rental agreements come to an end, tenants that do renew will likely face steep rental increases, especially in this high inflation environment. This doesn't even factor in new opportunities for growth. For example, this past March, the company opened a new $34.6 million medical center in Reno, Nevada. It also evaluating suitable uses for vacant specialty lots in Chicago, Illinois, Evansville, Indiana, and Corpus Christi, Texas.
John, given how the company is growing revenue and earnings, has that been good for dividends?
Partnership has raised its annual dividend for 38 consecutive years. This puts Universal Health in an elite group of companies called Dividend Champions. That's a designation for businesses that have raised their annual dividend for 25 consecutive years. The company is actually only 12 years away from another designation, and that's Dividend King. And that's for companies that have raised their annual dividend for 50 consecutive years. Universal Health actually has a history of raising its payout twice in any given year. In the first quarter of 2023, it paid out 0.175 cents per unit and raised it to 0.72 cents per unit in the second quarter. This works out to an annual dividend of $2.88 per unit for a yield of 5.81%. That's more than twice the average payout of 1.6% from stocks on the S&P 500. It's also slightly above the inflation rate of 4.0%. And if history is any indicator, Universal Health will raise its payout again in the fourth quarter.
And those incremental increases really add up, huh?
Yeah, people might look at those incremental increases and say, that's pretty small, that's pretty stingy. You could do it some more, but you have to look at the big picture. So over the last 25 years, management has increased its quarterly dividend by 69%. Over the last 25 years, with dividends reinvested, Universal Health has provided total returns of 641%. Again, that's more than double the S&P 500, which has returned 293% over the same time frame. Now, immediately before the pandemic, Universal Health had posted total returns in excess of 1,600%. Meanwhile, the S&P 500 had returned slightly more than 200%. So it's not tough to see why investors love high-yield dividend stocks like Universal Health Realty Income Trust.
All right, John, thank you so much for your analysis. Despite the big growing dividends and capital appreciation, Universal Health Realty Income continues to fly under the radar by most investors. It's difficult to understand why. Universal Health Income has raised its dividend for 38 consecutive years, consistently provided investors with higher returns than the S&P 500. And by all accounts, the distribution hikes and stock market gains should continue over the coming years and decades. That's it for today. We'll be back with another income idea soon. Stay tuned. If you want to read about John's analysis, you can just go to incomeinvestors.com. Don't forget to like this video and subscribe to our channel. Goodbye for now.